All right, guys, back to work. Brand new week, brand new year. And of course, it's time to get back after it here this evening, Monday evening after all. It is January the 4th, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's Tuesday's trading session. I get a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the E-minis. Oh, we got the oil, and we got the gold on our radar for tomorrow. Boy, speaking of tomorrow, we have quite the week ahead of us. We're not going to waste any time this week. Got a bunch of news, got some election stuff coming later on this week, some jobs reports, and of course, some big moves on the charts from today. Got a bunch of ranges, got a bunch of channels, and a bunch of great setups we're tracking for tomorrow. That's Tuesday's trading session. Before we jump in, though, and get this party started here tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We post this video newsletter every evening with our best trade ideas for the following day, so make sure you subscribe. That way you don't miss tomorrow night's video. And don't forget, if you have any questions for me at all, drop those questions in the comment section for me. I'd love to answer your questions once we finish up with the video here tonight. And as always, I really appreciate you guys tuning in every evening. If you like this video as much as I enjoy making it for you every evening, always appreciate hitting that thumbs up button to help support this YouTube channel. So make sure you subscribe, drop those questions if you got them in the comment section below, and thumbs up if you guys tune in every evening to watch this video. But enough of the introduction. Time is ticking. First day back, getting the cobwebs all dusted off. It is great to be head back to my desk here tonight and with you guys here on this video newsletter. Now, look at the charts here as we go into tonight's video. Real quickly here, we got a bunch to talk about on this newsletter here tonight. S&P took a bath today, right? S&P's got a big move down, and we're kind of flagging right now on the S&P. Get a shallow pullback here. I want to sell short on the S&P for tomorrow, but I've got one big problem, and that is this pendulum swing support down around this 76 area. I'm looking for a short, but I've got to be a little bit careful here because there's a range overhead that's acting as a magnet and that support level below. So I'll put the plan together tonight. Obviously, I got a pretty good idea for the best ways to get short, and then if we do get a reversal, we'll put the plan together for getting long tomorrow if these buyers can get their act together here before this thing crashes back down again. Over on the oil, right in the middle, oil is basically a spike in channel right now. It's a relatively strong move down into a relatively shallow channel here. Now, spike in channels are one of my favorite chart patterns because they make it very easy to know exactly where to look for that short. I'd like to get short up around that 48.40 or higher here tomorrow, but you'll notice I've got some targets down here at 46.39. There's not a lot of space left to go here to complete that measured move, so I'm going to have to get a little bit creative as the market goes lower if we do want to capitalize on that next leg lower. So we'll definitely take a look deeper into that oil chart here for tomorrow, and possibly the most active market of the week this week because of some news we'll check in a moment here is this gold. Boy, gold had a very strong run higher. You might want to call this a spike in channel. Maybe you call it a spike in range. The bottom line is we're very bullish right now, but there's one problem. We seem to be running into some overhead resistance up around this 1948, 1945 high. And of course, I don't want to buy at resistance, right? I want to buy at support. So I'm looking for ways to get long on the pullbacks here on the gold. But you know what happened this morning? Yeah, there was a gap this weekend, wasn't there? 1901. So I'd like to buy a pullback right here on the gold, but at the same time, though, I'd be lying to you if I said I wasn't looking for a chance to get short on this sucker and run this thing back down around that 1900 to fill that weekend gap. So as you can see, there is no shortage of opportunities here setting up on the charts here for tomorrow. Now, before we jump into the charts, though, I just want to make sure we take a look at the schedule here for tomorrow. That way you know what the layout is, because there's a lot going on here in the financial markets. Now, it's a lot of news, but it's also a lot of election stuff, right? A lot of politics here this week. Now, first of all, let's talk briefly here about the big picture. Today on Monday, we had the OPEC meeting. Now, they were trying to convince each other, I guess you would say, that they should be easing off their production cuts. In fact, they're trying to add an extra 500,000 barrels per day in their production. Now, as you can imagine, right, in a world of COVID lockdowns where there's not a lot of demand for oil right now, adding more supply in the oil market could be disastrous for the price of oil. And you could definitely tell they're struggling to come to an agreement on this because they didn't get any agreement inked on paper today. That means tomorrow might be one of the most, let's say, squirrely days of the week, right? Next couple days here on oil. So be aware of that as OPEC tries to figure out if they're going to cut their production or not. If they do agree to an increase in production, obviously that is bearish for the oil markets. And so we'll definitely be looking at that closer here, right, into tomorrow. Speaking of tomorrow and Wednesday are really some of the biggest days of the week here. Tomorrow is that Georgia runoff election here in the U.S., which is touted to be one of the most important elections of the new year because it sets up who controls the U.S. Senate, right? The kind of the upper house here in the United States. So there's a lot on the line in tomorrow's Georgia runoff election. How much will it affect the financial markets? It's tough to say, but I think a lot of the nervousness you saw, gold spiking up today, S&P collapsing, I think a lot of that was probably some profit taking and some speculating ahead of tomorrow, what could be a relatively jumpy day. I don't really know what to expect as far as the election goes for tomorrow. We probably aren't going to know who wins the election tomorrow, so it's tough to tell, but tomorrow is that runoff election, which is really anticipated to be one of the most important pieces of this, this ongoing saga that is the 2020 presidential election. Now, the big news for tomorrow is very simple. It's that ISM manufacturing number, right, tomorrow at 10 o'clock Eastern time. So be aware of that. That's the big news. If you could only be at your desk for an hour tomorrow, 9:45 to 10:45, that's where you've got to be at your computer tomorrow, making sure you're with us in the trade room. And of course, looking for setups in the reaction to that ISM manufacturing index. So that's the most important time to be at your desk tomorrow. And again, we'll see how much the election actually affects us tomorrow in the financial markets. And then as we go into Wednesday is the day where they vote for the electors, right, here in the U.S. to basically finish the U.S. presidential election. Now, there's a lot of rumors going around. There's going to be, protests and who knows, right? It's very difficult to tell how much of a distraction that will be, how much it will affect the markets on Wednesday. So really tomorrow and Wednesday, tomorrow's that Georgia election. That's for the Senate, right? That controls the upper house. And then, of course, right, tomorrow, Wednesday, you've got the electors, right? Each state will cast their votes. And there's been a lot of speculation. There could be some fireworks leading into that. We'll wait and see, right? But that is something we're going to be keeping our eyes on Wednesday. Now, the big news on Wednesday is definitely going to be that PMI composite final. Now, the reason why that number on Wednesday is so important is because we saw a record-breaking, even with the COVID lockdowns right now, a record-breaking PMI number this morning at 9:45. I want to say we got a 57 reading. Anything above 50 is expansionary. Just to give you an idea, the UK had their PMIs come out last week and they were at 47, right? So the manufacturing number today looked really good. It's going to be really easy for us on Wednesday to compare the manufacturing with the composite final. That is probably going to be the biggest market moving event on Wednesday, is that 9:45 PMI composite final. Now, obviously, later on in the week, or later on in the morning, we got the petroleum status report for oil traders, and of course the FOMC meeting minutes. The meeting minutes also have potential to be some fireworks for us on Wednesday as well. But again, the big news will definitely be that 9:45 on Wednesday. So make sure you're at your desk right in the middle of the session on Wednesday. Thursday is kind of the, dare I say, the lull in the action. Now, that assumes nothing rolls over, right, from Tuesday into Thursday. So we may be starting to get the election results in Georgia starting to come in on Thursday, right? So be aware of that. But as far as the news goes, the big news of the day on Thursday is the jobless claims report. And then there's another 10 o'clock news report. They snuck this one in on us this week. It doesn't look as important, but I'll tell you, that ISM, anytime you see ISM, PMI, ISM, PMI, those are news reports you want to pay attention to. So again, Thursday is kind of it's kind of the most straightforward session. There's no election stuff, there's no central banking stuff, but 8:30 jobless claims and 10 o'clock ISM. I'll tell you, if there's one day this week you want to be at your desk with a cup of coffee in hand, it's definitely going to be Thursday. Now, Thursday, of course, being the day before the big news of the week this week. I know it's tough. It's tough to say this is the big news of the week this week, but it pretty much is. The employment number at 8:30 on Friday. They're expecting a pretty disappointing number. In fact, I think they're expecting like 50,000 jobs, which is a very small number compared to some of the jobs we've added over the past few months ever since the beginning of the pandemic. Now, obviously, we got a while to prep for that. We'll see a little bit of a heads up from the employment number at 8:15 on Wednesday, but that's the big news on Friday, right? So Thursday, Friday are setting up to be great days this week. The whole week, as you can see here, is just a peppering of politics, election stuff, and of course, some pretty big news. So I just wanted to make sure I gave you guys kind of a lay of the land here for this week, and we'll just kind of touch on this before we finish up each session the rest of this week. Tomorrow again, though, Georgia runoff, and most importantly, the ISM Manufacturing Index at 10 o'clock Eastern Time. Now, don't forget, tomorrow morning and every morning, 8 o'clock Eastern Time, we're going to open up the trade room, we're going to prep our charts, and we'll execute the plan together. I would love to have you there, right there with me. In fact, what I'll do is I'll put a special link for you to get registered as a member and come out and join me every morning in our trade room. I'll put a link for you guys right below this video tonight, in the description of this YouTube video, or if you're on the blog, Sideways Markets, there'll be a big button for you to click on the page on this page right now. Grab that link, get registered for the trade room tomorrow morning. Again, we open up at 8 o'clock Eastern Time, and you could trade this stuff right along with us. So now we get a pretty good idea of, again, a lot of news coming out, and not to worry. I know I covered a lot here in this introduction for the news here, but tomorrow, 10 o'clock Eastern Time is the big news, and of course, again, got the Georgia runoff, and I'll keep you posted on anything we find new here as we go into the rest of this week, right? Again, we record these videos every evening, Monday through Thursday evening. Now, jumping into some charts here. Boy, S&P is ready, oil is ready, and gold is ready. Let's jump first here into the S&P 500. S&P took a bath this morning, as you probably don't need me to tell you. And I want to kind of start off by giving you kind of a little bit of a bird's eye view here of the market. We went into the New Year holiday with a strong move higher into a trading range. We, of course, came out this morning and saw the market had spiked up above that trading range. Now, ranges, we know, we should know at this point, ranges act like magnets. So the first thing we talked about this morning in the trade room was that this could easily this could roll right over and go back into that trading range. And that's exactly what happened, right? So market spikes up, buyers, and again, maybe it's because of the election stuff coming on Tuesday and Wednesday this week. It's a little bit difficult to tell exactly why it rolled over, but I assume it has a lot to do with the fact of this uncertainty of a lot of different topics that we talked about already. But the market rolls over, and of course the amount of the move above the range, I can then flip around and create what we call a pendulum swing back on the other side. And this is what I think to be one of the most important factors on this chart and the plan for tomorrow, because you'll notice what happened. The market pretty much runs through that pendulum swing. It goes through the pendulum swing, which is known as being a very important level of support around these range tops and bottoms. They go through the pendulum swing, but look, they don't complete it. They close back above that pendulum swing now, which really leaves the door wide open right now for these buyers to run this thing back up into that trading range, and possibly, if the buyers have their way, possibly all the way back up, right, to retest those highs. Now, before I try to buy this thing going higher, though, there's one big elephant in the room right now, and that is this strong move down. Now, this is going to be some really good examples of this in tonight's video, because you'll notice on this chart right now, the bears got that very strong move down, but look, they never came back and retested. 9 times out of 10, when you see a strong move in one direction, you're going to get a retest of that low and potentially another symmetrical leg lower. You'll notice we got a strong move down, but they have not retested that low yet. Now, this is the only market. Gold is almost retesting. This is the only market, though, that has that loop still wide open. We call these open loops, right, in our trade room. It's kind of a metaphor for the bears want to come back down and close that loop, right? They want to get back and retest that 36.51. So I have a hard time being a buyer on this market. I do realize the pendulum swing support did a good job at holding. I do realize the range overhead is a very good magnet for price here. I do realize that. But at the same time, though, I can't deny the strength of this move going lower. So my biggest problem is I want to get short. I want to sell the S&P for tomorrow, at least based on what we know right now. My challenge, though, is if I was a buyer on this, one of the easiest ways to pick a bottom on one of these moves is to let the bears try once, let the bears try twice, and then see what I've done here? I'm connecting these highs and bringing it down to that low, and see how this sets up with it's like a hidden channel almost. I'll tell you right now, if it wasn't for that strong move down, I'd be looking for that buy. Right? If this wasn't as strong going lower, that buy would be where I'd be looking to get long, right? Going back up into that trading range. And guys, for all I know, the buyers might be able to hold that and take this thing higher. The problem, though, is one of the big rules we follow in our trade room is we don't want to go against that direction. We don't want to go against that until the buyers can take control. Now, the buyers can prove me wrong on this. The buyers can easily take control of this with a 1, 2, 3 reversal. But right now, they're not there yet. They're definitely not in control yet. They have the potential to take control, but remember, if the bears have a strong move down like this, we have to give them the benefit of the doubt. It's not until the buyers can actually get that jump, right, off of these lows, then I can start to think about being a buyer on this, potentially back into that range and potentially up into that pendulum swing. So that's what's on my radar right now. I want to get short here on the S&P, but I'm worried about these buyers coming in at this area of support. Now, this hidden channel right here, right? This little 1 try for the bears, 2 try for the bears, that hidden channel. Now, I'm going to get a little more advanced on this, but you can actually flip that around and use that to get short. And that's the pattern I'm looking for here to get short here as we go. What I'd like to do is, if I can get a pullback, right, coming off of this high, I'd like to get bears trying once. I'd like to get bears trying twice. And the trick to this is you want to draw the trend line off of those lows and then up around that high. And I'll tell you right now, this is a fantastic setup if we can get it here for tomorrow. So as the market goes lower, again, anticipating there are likely going to be some buyers coming in, because again, if we didn't have that strong move down, I'd be looking to buy right off that low. The problem is that strong move going lower here. So I'd like to get short off what I would call a nested failure pattern, right? Nested failure pattern. Now, I know what you're thinking here. What if we don't get that set up? What if the market runs lower here? Well, here's the problem. We know where the bears want to go. The bears want to get down to retest that low. That's a major area of support. So if I can't get that ideal entry, my next best entry is going to be what I call a two-try trap. And basically what it will look like is, as the market goes lower, I'll be looking for trap setups. We call them trap patterns. This would be a bull trap pattern before we get down into that trading range, right? So as the market goes lower here, I'm looking for a chance to get short, either with a nested failure, right, or a trap pattern. If things really go crazy, right, if we really see like a 1, 2, 3 breakdown, right? If we were to see another 1, 2, 3 move going lower, then what I'll do is I'll mark up that low, I'll mark up that high. And if I can get another strong leg, remember, a strong leg says expect another leg in the same direction. If I can get that second leg to keep going or to give me some strength, I can then look for a pullback pattern, a buyer failure pattern, a trap setup off the high of a new hidden channel. So those are some setups I'm watching for as we go lower. And I should also remind you too, I'm simply going over the basic ideas here for tomorrow. If you want to learn the exact entry patterns, the failure patterns, the trap patterns, the pullback patterns, and all of my favorite entry setups, I include all of them in our free trading course here at School of Trade. What I would definitely recommend is, if you haven't done so already, grab that link that just popped up there and register as a member of our new free trading course. As part of the free course, you'll learn my 3-step strategy. You'll learn my 4 favorite entry setups. I'll send you an invite to join our trade room, and you'll also see hundreds of examples of how we apply those setups to our favorite futures markets. So make sure you grab that link that's popped up there. If you're serious about your trading, you definitely want to check out that free trading course. If at the very least, just so you can follow along with me every evening on this video newsletter. Now, what if we jump higher here? This would be, all right, another possibility here right now. What if the market jumps higher? Now, the ideal scenario for this market turning bullish would be a strong rally going higher. Now, if we get a strong rally going higher, this will be that 1, 2, 3 reversal pattern that we need. The key is that jump off the moving average, right? We don't have those bulls in control yet, but if we do, I can now grab a trend line off those highs. I can bring it down to that low, and I can now look for buy setups, right? Getting in off the low of this channel. Now, one thing you want to keep in mind on this is, if we do end up, let's say, for example, spiking into that range and going sideways up here, that becomes a bull market into a trading range. What do we do with a bull market into a range? We look for seller failures below the low of that trading range, right? So we just want to keep in mind, as the market runs higher, that's where I can be looking for. If it starts going sideways inside the range, focus on what we call failure patterns, right? Failure setups, seller failure patterns. And again, I cover all these in a lot of detail in that free trading class. That way, when I say failures, you'll be able to know exactly the rules I'm talking about for that entry pattern. So failure patterns would be great if it just cranks right through these highs. Obviously, the strength of that move, I can mark up that high, mark up that low, and I can look for my entries on the way up to retesting that high. Now remember, I'm not just simply looking to buy the low of that channel. Most of the time, this will end up being one of those failure into pullback combination setups. So if you were to kind of zoom in on this, if you were to zoom in on that area right there, right, it would be one of those, again, we call them failure into pullback combinations. You'll learn more about those in the free course, like I mentioned earlier, right? But that would be a pattern I'm looking for to trigger the entry off the low of that channel. So now I think we're pretty prepped up and ready to go. The only thing I got to be careful with tomorrow, again, with these elections coming up, is if the market goes sideways at some point, right? Again, with the runoff election tomorrow, with the big, electoral college vote on Wednesday, I could easily expect there to be a range that kind of pops up maybe right in here somewhere, right? So there's probably going to be some variations of this I didn't touch on in this video, but not to worry. Tomorrow morning, 8 o'clock Eastern time, be there with us, and we'll make sure you don't miss any details, right, for tomorrow. So S&P, I think, is looking pretty good here. I like the plan on the S&P. How about some crude oil? Remember we said earlier, oil could be one of the more difficult markets as we go into tomorrow, mainly because we still have that kind of lingering, right? We still have that lingering OPEC deal, right? They're trying to convince each other to add more production, which hasn't been a very good plan ever since this pandemic. So we know tomorrow could be a bit squirrely, right, on the oil price as we go into the kind of the final hours of this OPEC negotiation. Now keep in mind, usually OPEC will be meeting, they're doing virtual meetings right now before the US market opens. Usually right as the US markets are opening. Remember, that's going to be right late afternoon, right, in Europe, right? So don't expect it to go too far into the U.S. session, but early tomorrow morning, obviously if you're in London, it'll be a full day in London, but if you're in the U.S., right, like we are in our trade room, expect there to be, they're going to probably be bickering about this stuff until early part of the U.S. session tomorrow. So we do want to keep an eye on the time for tomorrow. What's the most important thing right now on the S&P? Well, on the crude oil, excuse me. Well, the oil is, speaking of the S&P, it's a lot like the S&P, right? The oil had a strong run up. It goes sideways into the New Year, and actually the Christmas and New Year holiday there, right? The market spikes higher here on low volume and rolls over back down in this trading range. I take the amount of the move above the range, I project the amount of the move below the range, and look what we get, right? We get that pendulum swing, which is also, look at this, also lines up right with a triple measured move. So it seems pretty obvious right now. There's a big bullseye, on that 46.39 area, right? So there's a big bullseye there. If the bear, remember, there's a lot of potential for some fireworks in this market the next couple of days because of this OPEC announcement. And so we definitely want to be ready for potential moves here. I would imagine, though, if the bears really get what they want here over the next 24 hours, a retest of that 46.39 seems to be a given. There's a big round number at 45, and the big low is down around 44. Now, $44 a barrel, you should be seeing that number in your sleep right now because 44 has continued to be a magnet for oil. So I'll tell you right now, if they do add more supply, like we talked about earlier, I would imagine 45 and 44 would be pretty easy for those bears. We're only at 47 right now, right? This is not a huge jump. That's only a $3.50 move there. So it's not a huge move here as far as oil terms go. So Be aware of that. Now, if they don't get that production deal going, right, you could easily imagine a retest of this high here. If they keep bickering, though, right, if they keep going at each other's throats over there, right, trying to get this deal done, they don't get anything done. This is where we may see some chop, right, as we go sideways there. So we do want to be aware of that. So we know we're bearish, right? I think that's pretty easy to see here right now. What do we do in a bear market? We want to sell high, want to sell at resistance. I want to basically sell the pops here right now. The big question though I have is do these bears have the juice, right? Do they have the juice? Because you'll notice on this chart, they have this strong move down. Now, what do we expect whenever we see a strong move lower? We expect another leg in the same direction, right? We see a strong move down, they get their retest and a symmetrical leg. We see a strong move down, they get their retest, but you'll notice no continuation. That's probably the biggest clue we see on this chart right now, besides having the pendulum swing target down here, is that we know we're bearish, but we have zero evidence right now that sellers are eager to sell anything lower. And this could change, obviously. We got some big news coming out tomorrow regarding that OPEC deal. Maybe tomorrow, maybe not till Wednesday. We'll see what happens. But the key component right now, though, is that we want to either basically wait for this market to pop off these lows, right? Either wait for it to pop, get above some of these highs, and get short off the high, or we're going to have to try to thread the needle as we go lower here down to that pendulum swing. Those are the two main components you want to be thinking about as we go into, right, tomorrow's trading session. Now, I mentioned in the introduction, you might look at this as like a spike in channel, which is really great because spike and channel patterns they're pretty easy to trade. Spike and channel patterns always tell us to look at the first pullback and the base of that channel. So right where that trend line runs into it and the top of that channel, that is typically where sellers in this case are going to be looking to get short as a spike in channel. You could also say, no, Joe, it's a range down here. It's a bear market into a trading range. Okay, well, if it is a range down here, which I can easily see what you're thinking on that. If it is a range, then how do we trade a range? We want to get up at resistance areas overhead and want to focus on failures, right? Focus on those two try failure patterns up above the range. So you can see it doesn't matter whether it's a spike in channel or whether it's a trading range here. It pretty much points all the fingers right at this area right up overhead. Now, when it comes to a pullback like this, it's always important to remember that the strength of that pullback is really important. So for example, if I see a relatively shallow pullback, I'd like to get above those highs. I'd like to get some buyers coming in, see if those buyers can try to get long off that pullback and then give me a shot to sell off that high. Again, we call these failure patterns. And again, I go into a lot more detail of those in that free trading course that I mentioned, linked up in the upper right-hand corner. Keep in mind, though, if we were to get a much stronger jump, right? Let's say the market really jumps higher here now, right? What happens when we get a strong move? We have to respect momentum. And so in that situation, right, what you now want to look for is we call a nested failure, which is where the buyers try once, the buyers try twice. And keep in mind, guys, there's a lot of variations to nested failure patterns. The reason why you'd want a nested failure is because of that strong jump higher. But the reality is we want the buyers trying twice. Now, sometimes we get those, right? Sometimes we get those one, we get those two, we can draw that channel right off the high and sell like that, right? There's those types of variations. There's a lot of different types of variations of this pattern. I won't go over all of them here this evening. We'll obviously cover the details tomorrow morning in our trade room, or you can grab that free trading course in the upper right-hand corner and do it that way too. But that's what I'm thinking here as we go higher. If we go sideways, I get to sit on hands, right? If we go sideways, there's not a lot I can do here. I still want to wait for that pop. I want to wait for those buyers, and I want to sell into stop losses, either with a regular failure pattern or a nested failure, or if we go lower. Now, going lower, this is where we have to thread the needle. We know where the market wants to go, but if I run lower, right, and I try to sell a pullback here, is this giving me a very good risk-reward ratio? If I sell down there, am I able to sell high? No. Am I able to get a good risk small, earn large? No, not really, right? So what's the best entry pattern? And we talked about this on the S&P. What's the best entry pattern? First of all, out of all of my setups, my favorite setup whenever I'm worried about selling too low, or in this case, selling into support, is always going to be a trap, right? So looking for traps as we go lower, because again, traps are going to give me the chance to sell as high as possible, to risk small, to earn large. It's kind of the best option if the market does run lower. Now, what I always look for on these is that strong move down, that shallow pullback, that lower low in price, and then hit it, right, with a strong red candle closing back below the moving average. And again, we'll talk more details about the setup exactly in the free course, and we'll do it tomorrow in the trade room. But a trap as we go lower is definitely going to be on our radar. And then again, let's say the bottom falls out of this and this thing runs lower, pulls back to the moving average and runs, right? If we really get this thing to really slam lower here, what does that tell us? We're probably trying to make a run to 45 or 44 here. What do we do in those situations? These are called 1, 2, 3 breakout moves, right? And you can see one right here, right? 1, 2, 3 moving lower, mark the low, mark the high. You can see they went sideways on this one, so it's not a very good entry on this one. But if I can get this run lower, 1, 2, 3 move, now I can definitely get excited about getting short off of that high. And remember, guys, we're not just selling the top of that channel, right? I like to look for those failure into pullback combination setups, right, as we go off those highs, right? Imagine you're zoomed in on that area there, right? And again, I'm just simply drawing the screen right now, but you can see more examples of these specific entry setups in the free course, or obviously we'll do it together tomorrow morning in our trade room, right? So grab that move off the high, and again, we get that 45 if we can really push through that pendulum swing. The next thing you want to think about is how would this market turn bullish? It easily could. Again, we get a big, potential OPEC announcement coming tomorrow, maybe Wednesday. So, how do we buy this market right now? Well, it's a little bit too bearish to want to pick a bottom on this, unfortunately here, especially since we haven't completed that pendulum swing. If the market pops higher, I am definitely not trying to buy that first pullback because right, with the momentum, we're likely going to end up right back at those lows. But if those buyers can pull a rabbit out of their hat, and if they can hold that pullback and jump off the moving average, again, what do we call those? 1, 2, 3 reversals in this case. Now I can mark up that high, I can mark up that low, and I can look for those failure into pullback combination setups off the low of that channel. Where's my target on this situation? Yeah, it's pretty easy, right? 49.83. And honestly, if you have an extra contract to let run, that $50 a barrel area seems to be a pretty easy magnet overhead for those buyers. There's always a chance too, sometimes the market just makes a rip going higher. If it really races going higher, watch out for those 2 try trap entries. If you're a client of mine, those are the number 5 pattern right on the worksheet. So definitely, if the market does just really rip going higher here, look for that shallow pullback, that higher high, and that trap. So 1, 2, 3 reversals into hidden channels, or those 2 try traps. I always like to find those hidden channels here and try to really combine those entry setups off of those channels as we go higher. So we're looking good here for oil here for tomorrow. Again, don't be surprised though, as we go into the next couple days here, we may start seeing some sluggishness, right, and some rangy markets here as we go into these couple days here, the election coming up on Tuesday and Wednesday. So oil looking pretty good there. Very excited about oil for tomorrow. And then wrapping things up here tonight on the gold, the yellow metal here over on the GC. Now, what's the key takeaway right now on the gold? There's a bunch of really important clues here right now on the gold. First of all, I think it's pretty easy to see we're bullish, right? We're definitely bullish. We've got one leg up. We got two legs up, right? So we're sitting right at major resistance, right? That's one, I think, really important clue. Another important clue you can see is that weekend gap. Now, what exactly is a weekend gap? Weekend gaps are gaps that open over the weekend, right? So what happens is you got Friday's close, right? That was last Friday's close. What was that? New Year's Eve, I think it was. That Friday close was 1901.6. Now, see what happened though. They open up now on Sunday evening, right? There's your Sunday open, right? You got Friday's close. And there's a gap between the close on Friday and the opening price, right, on Sunday. That gap will be a magnet for the sellers, of course, for the rest of the week. Now, historically speaking, these gaps are going to be filled before the closing bell on Wednesday. That doesn't mean this one will be, but historically speaking, we usually see these weekend gaps, the Friday close to Sunday's open, we usually see them closed before the end of the day on Wednesday. So we'll keep an eye on that, but that will be a magnet, right? Think of that weekend gap like a magnet for the rest of the week. So if the bears get any control of this market this week, you know where they're trying to go. Right? That'll make a great spot to place a final runner target, right, on a short position. So keep in mind on that weekend gap. The next big clue, which might be the most important clue on this chart, we see a very strong run higher here, right? And again, I'm sure a lot of this was a little bit of jitters regarding vaccine rollouts, lockdowns, right, coming across the world right now, and of course, the election stuff coming here for tomorrow. Now, what do we expect to happen with a strong move up? We expect to see a retest. It hasn't happened yet, has it? It sure has come close, but they have not successfully retested that high. Now, I mention this because close, unfortunately, only counts in horseshoes and hand grenades, right? It doesn't count in the financial markets. It doesn't count in the markets. So what that tells me is if this thing pulls back here right now, that'll be seen as a major failure on behalf of the buyers. And that is a big problem if I want to buy this pullback. That's why I said that's probably the biggest clue going into tomorrow. You know, we know we're bullish. You don't need me to tell you we're bullish right now. You can definitely see there's a range on here. You can easily connect these highs and find this low and call this a spike in channel. And since we talked about these already, I won't go into too much detail on this, but what does spike in channel tell us to do? A spike in channel tells us to find the first pullback and the base of that channel, right? We have it on oil before. That's the buy zone, right? That is the buy zone on a spike in channel, okay? Or you call this a range, right? Now, what does a range say to do? Ranges tell you to, in this case, a bull market, a range here, a bull market into a trading range says find levels of support below the range, right? Buy low at support levels below the range and use those failure patterns, right? Remember, focus on failure setups whenever you're buying below the low of a range or selling above the high of a trading range. Okay, so we can easily see this area is where we want to be focused on for the buy side. So really what it all comes down to is there's two scenarios here. Both of them do not make it easy for the buyers here. For example, one scenario would be, let me kind of zoom in this a bit closer here for us. One scenario here would be we don't retest the high, right? We open up here in a few minutes right now. It's almost 6 o'clock Eastern time right now on this recording. So, a couple of minutes from now, we'll find out if they're going to retest that high. Let's say, for example, they don't retest the high, right? They try once, they try twice, they don't, and they come back down. What's my concern? My concern is the buyers are embarrassed, right? Because they failed twice to retest the high. In that scenario, what do? We got to protect ourselves. It's not a bear market yet. It's still a bull market, but I want to get underneath these lows. And then what's the best technique to be a buyer down here if I'm worried about the sellers? The best technique is to give those bears one try, give them two try. Again, there's a lot of variations, right, of these nested failures, but that's the scenario, right? That's the scenario if they fail to retest that high, right? It's again, we call a nested seller failure pattern off of that low. Now, let's say, though, they do get that retest, right? Let's say they do, and then they pull back. Well, now we have another problem, and I don't want to go too far down this rabbit hole, but now we have a range where they're rotating off the high. Now, this is a little bit more advanced tactic, right? But I know you guys can handle it. When we come above the range, right? There's a big difference. There's a big difference in a range-bound market between this pullback, right? That pullback I can get aggressive on, but this pullback I've got to be careful, right? Goes up and comes back down. And I think you can probably see the difference, right? The difference is there is a lot more momentum for the bears when I have the market what we call rotating off the high, right? The bears have all the wind at their back in this example on the right. The bears have nothing going for them, right? On the example on the left. So if we do open up here at 6 o'clock and the market jumps up and then comes back down, it's almost just as bad, right? So at this point now, the bears have all of that momentum. It's not a bear market yet, but you got to respect that momentum now. Let them try once, let them try twice. That tells you right where their stops are, and we can simply buy right into those stop losses again with a nested failure pattern, right? So just want to keep it in mind here for tomorrow. It seems very easy at first, but when you look at the scenarios here, you really got to be careful being a buyer at these lows. Now, this is where that gap comes into play. Because let's just say, for example, we see a strong move down, right? The bears come in, they try once, they get underneath this channel, right? And they just hit it, right? And they run lower. What's the plan from there? Yes, now we know it's on, right? Now it's the good, right? This would probably be the easiest money to make tomorrow is targeting that gap. Now, I'm not going to sell that pullback, but I will, though, go out, find that low, find that high, and get aggressive off the high of that channel, right? Remember the pattern? It's a buyer failure, right? Buyer failure into seller pullback combination, right? So if we can zoom in that area right there off of that high. And again, I'm going to go into a lot more detail of that tomorrow morning in the trade room. And obviously we cover that again in our free trading class linked up in the upper right hand corner. And all the important links you guys need are down in the description of this YouTube video. So we do want to keep an eye on that. If the market just rolls over here and takes a bloodbath, right? At that point now, remember, keep your eyes open for those two traps, right? Traps are always going to be some of my favorites, right, as we go lower, right? So keep in mind on those. As we go higher here, I've got some resistance here overhead from that pendulum swing. Now, there are two types of range breakouts I like to look for. Before we do that, though, where are we trying to go? 71.9. 1971.9 is the next big milestone before we get to that. Where is it? $2,000, right, an ounce right there on the gold. So we're a ways away from that area. I'm looking for either a 1, 2, 3 breakout pattern, mark the high, mark the low, seller failure into bullish pullback combination setup off of that low, or we may get that strong run, right? Strong run higher, that shallow pullback off the moving average, that higher high in price, right? And that trap low before we get there, right? So those are two breakout patterns on my radar for tomorrow as we go higher. So as you can see at this point, a little bit tricky here on the gold, especially with this pullback. So watch carefully on the pullback. Be careful with the range up here, right? If we sit in that range and come down, not much changes. And again, I'm sure there's something I probably missed here on this video tonight, and I'll make sure to fill in all those blank spaces tomorrow morning with you guys in the trade room. Now, speaking of the trade room, the easiest way to get registered for the trade room tomorrow morning is, again, I'm going to put a link for you guys in the description of this YouTube video. So grab that link. That'll take you over to the website. You can get registered as a brand new member. Now, don't forget, right, we open up tomorrow morning at 8 o'clock Eastern time. If you need any help getting registered tonight or tomorrow morning, don't be afraid to call the office. We're always here standing by to answer all your questions. So grab that toll-free phone number and give us a call. We've also got live chat on the left, live chat on the right. And of course, if you've done so already, make sure you grab that free course as part of our free trial. But that's it for me tonight, guys. Hope you learned a lot on this video newsletter. Hope I'll see you tomorrow morning in our trade room. I know this video was a little bit longer than it really should be, but I want to make sure we covered all the bases here so you get a great foundation ready for this first week of the year 2021. I'm not going to lie, I missed you guys over the holiday, right? It was a pretty extensive break this year. I had some great time with family, a little bit of friends. You know, we're still kind of locked down here in Los Angeles. So hopefully everyone had a great holiday, a very happy new year. Hope everyone is happy and healthy going to the month of January, and hope I'll see you tomorrow morning in our trade room. If not, make sure you come back and see us tomorrow night. We'll do it again tomorrow night with the best trades for the Wednesday trading session. But for now, though, don't miss tomorrow. You know where to get more information. Don't be a stranger. Call the office if you have any questions. But that's it for me tonight, guys. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.